You think you know XRP's value. You check market cap, supply numbers, and charts, and you think you have a grip on what this asset is worth? But what if I told you that everything you've seen so far is built on a lie? That the numbers the world uses to value XRP aren't just misleading, they're dangerous. This is WealthyWise, where we go beyond headlines to show you the reality beneath the hype. And in this episode, we're pulling back the curtain on one of the most misunderstood digital assets in history. We'll explore why XRP's market value is completely wrong, why scarcity is far more extreme than anyone realizes, and why a violent repricing is inevitable. This isn't financial advice, it's a wake-up call, because in crypto, being early to the truth isn't just profitable, it's survival. Let's start with a picture that will stick with you. Imagine a bustling city of 40 million people. It's early morning, and panic spreads like wildfire. Only 50 loaves of bread left in the entire city. Shelves are empty. Shops are barren. Crowds form mile-long lines, and prices skyrocket. It doesn't matter if you've got stacks of cash, bread is nearly impossible to get. Now replace bread with XRP. The crypto market says there are 100 billion XRP tokens in existence. Market cap calculators confidently display neat numbers, multiply price by total supply, and people assume that's reality. But here's the truth. The vast majority of those tokens will never touch the open market. They're locked, lost, or sitting in wallets that will never sell. That's the illusion of plenty, a psychological trick that keeps people complacent until it's too late. Market cap is the most popular metric in crypto, but it's also the most dangerous. It takes the current price and multiplies it by the total supply ever issued. That's it. No nuance, no context. It assumes every coin is instantly liquid, accessible, and ready to be sold. Imagine if we priced oil this way. We'd calculate value as if every drop in every reserve was immediately available, ignoring political restrictions, extraction timelines, and strategic stockpiles. Oil prices would look artificially low because of phantom supply. This is exactly what's happening with XRP. The market cap you see today is based on theoretical numbers, not practical liquidity. And when the market finally realizes how scarce XRP actually is, that illusion will shatter and prices will move violently. Let's dig into where XRP really is. Of the 100 billion XRP tokens, 36 billion sit in Ripple's algorithmic escrow. This escrow system was designed to create predictability and prevent panic dumping. Each month, up to 1 billion XRP can be released, but if it isn't needed, it's locked right back in for another 55 months. Sounds like a lot of supply, right? Wrong. Because most of the XRP that escapes escrow never hits public exchanges. It's distributed in private deals with banks, payment processors, and strategic partners. These deals are structured, long-term, and regulatory compliant. That XRP isn't coming back to Binance or Coinbase. It's being integrated into financial systems you'll never directly touch. Retail traders are fighting over scraps while a parallel institutional market quietly hoards supply. Another 30 billion XRP sits in long-term institutional wallets. Founders, early backers, regulated entities, and strategic investors hold these positions not as speculative bets, but as infrastructure. These wallets are visible on-chain, and many have remained untouched for years. Think about this strategically. Ripple is building global payment rails. If you're a central bank piloting a CBDC, are you dumping XRP for a short-term profit? Of course not. These holdings are part of a blueprint to make XRP indispensable for global settlement, and dumping them would sabotage their own system. This is why I say most XRP isn't for sale. It's not an investment, it's infrastructure. Then there's the irretrievable XRP, at least 15 billion tokens that are permanently lost. These are the coins sent to dead addresses, lost due to forgotten seed phrases or trapped in inaccessible wallets. They're digital ghosts. They inflate total supply numbers but are functionally gone forever. Billions more sit locked in cold storage, never moving. Blockchain analytics shows wallets that haven't made a single transfer since 2017. Holders who have weathered bull runs, bear markets, lawsuits, and regulatory drama without flinching. That's not liquidity, that's hibernation. And here's the kicker. Every day, more XRP is effectively burned from circulation due to security failures, exchange mishaps, and simple human error. If you think your XRP is safe because it's sitting on an exchange, think again. Exchanges operate like digital banks. They keep massive reserves to cover withdrawals, but those reserves aren't part of real price discovery. And when bull markets return, exchanges freeze withdrawals, systems crash, and liquidity vanishes. The biggest risk during a supply squeeze isn't that you'll miss the price spike. It's that you won't be able to sell or move your tokens at all. That's why serious XRP holders are moving their stacks to secure hardware solutions, cold wallets, and multi-sig setups. In a scarcity event, control is everything. Here's the brutal truth. Out of 100 billion XRP, only 5 to 10 billion actively trade on open markets. That's the real number driving the charts you see. Every analysis, every technical level, every market cap figure is based on the illusion of 100 billion. But the battle for price discovery is happening with just a fraction of that. Think about that buffet analogy. A restaurant that advertises all you can eat, but only has one plate of food left. That's XRP today. And when the market wakes up, the repricing won't be slow. It'll be instant, brutal, and unprecedented. This isn't theoretical. We've seen this play out with commodities before. During the 2008 financial crisis, gold's above-ground reserves were estimated at 163,000 tons, but only a small fraction was truly liquid. Institutions were competing over the available supply, not the theoretical total, and prices surged from $800 to $1,900 in just 3 years. The same principle applies to XRP, but the supply imbalance is far more extreme. While supply shrinks, demand is on the verge of exploding. And these aren't hypothetical narratives. These are real, scheduled global events already in motion. ISO 20022 migration. By 2025, every major bank will have migrated to this messaging standard, and XRP is already compliant. Ripple is positioning itself as the bridge for this new infrastructure. Ripple's RLUSD stablecoin. This new stablecoin is designed to use XRP as mandatory gas, and every transaction permanently burns XRP. Even modest adoption means billions of XRP will be removed from circulation annually. CBDC pilots. Over 130 countries, representing 98% of global GDP, are testing central bank digital currencies. These networks will need a neutral settlement asset to interoperate, and XRP is a frontrunner. Institutional capital. ETFs are coming. Canada already has one live. When US regulators approve spot XRP ETFs, institutional liquidity will flood in. Put this together: supply locked in escrow and institutional vaults, permanent losses reducing circulation daily, stablecoin gas mechanics that burn XRP with every use, CBDCs and global banking adoption that locks more tokens away forever, ETFs and regulatory clarity inviting trillions of dollars in institutional capital. This is not a standard market cycle. It's a supply-demand setup unlike anything we've seen in finance. Markets don't price in scarcity slowly, they snap. Bitcoin's parabolic rise in 2020 wasn't a gradual climb. It was a repricing event triggered by supply halving and institutional demand. Gold, oil, and even real estate have all gone through similar cycles when supply shocks met demand surges. XRP's setup is more dramatic than all of them combined. When reality collides with perception, price will leap into uncharted territory. This isn't about hype or wishful thinking. It's about mathematics. Scarcity is the single most powerful pricing force in any market, and XRP is set up for a level of scarcity the crypto industry has never seen. When XRP's availability effectively hits zero, price becomes a function of desperation, not valuation. At that point, you won't be calculating whether to pay $10 or $20 per token. You'll be scrambling to get any at all. If you're watching this, you're ahead of the crowd. You understand that market cap is a lie, that XRP's true liquidity is a fraction of what's advertised, and that institutions are quietly absorbing what's left. Most investors won't wake up until XRP's price chart looks like a rocket launch. By then, it'll be too late to position yourself. The supply crisis is real. The demand tsunami is inevitable. And when the illusion of abundance collapses, repricing won't be a trend, it'll be an event. So what do you think? Does the market understand XRP's scarcity, or is it still trapped in the fantasy of 100 billion tokens? Drop your thoughts in the comments, hit subscribe, and share this video with someone who still thinks XRP is plentiful. Because when this market snaps, availability becomes destiny, and that moment is closer than anyone expects.